IBM says the quantum advantage era has begun. The business behind it has earned $1 billion total. On July 30, 2026, IBM, the University of Chicago, announced something the computing industry has chased for decades, a quantum computation beyond the practical reach of classical machines. And, for the first time, one you could trust. The machine finished the task in approximately 15 minutes. The best classical methods, the researchers said, faced prohibitive runtimes. Jay Gambetta, the director of IBM Research, condensed it into 9 words. We are now firmly in the quantum advantage era. And IBM did not announce it alone. 2 partner firms, Kidma and Algorithmic, published their own demonstrations the same day. A coordinated declaration of victory. But this is not a physics channel. This is a channel about money. And behind those 15 minutes sits a much stranger financial story, a technology IBM has been selling for nearly a decade, that markets have priced as the next great platform shift, and that, by the company's own account, has produced about $1 billion of business total since 2017. This episode is what the numbers actually say. The numbers surfaced in February 2025 in the least dramatic way possible, a comment to CNBC. IBM officials said the company had booked a cumulative $1 billion from quantum technology over the years. The disclosure came right after IBM's fourth quarter results. Revenue of $17.6 billion for the quarter, there's $62.8 billion for the full year, and hold those two figures next to each other. The quantum business needed 8 years to earn what the rest of the company collects in less than a week. Data Center Dynamics did the arithmetic. Spread across roughly 34 reporting quarters, the billion works out to approximately $29.94 million per quarter, and IBM does not provide a breakdown for quantum in its earnings reports. There is no line item, no segment, no margin. The billion is not a number you can audit. It is a number the company chose to share in an interview at the exact moment quantum stocks had everyone's attention. For a channel that reads filings for a living, that distinction is the whole story. Then the number got softer. When Data Center Dynamics asked IBM how the figure was reached, the company pointed to its 2025 Investor Day presentation, and the slide does not say revenue. It says IBM Quantum is approaching $1 billion of signings since inception. A signing is a contract booked, money promised, not money earned. CNBC reported $1 billion collected. The company's own slide described $1 billion approached and signed, and neither version is false. They are simply not the same number, and the gap between them is where this channel usually finds the story. On the Investor Day maths, the reporting window ran from Q1 2017 to Q4 24, which makes average quarterly quantum business roughly $31.3 million. What the money bought, on the other hand, is concrete. IBM says it has deployed just shy of 80 quantum systems since 2016. More than the rest of the world combined, including 13 utility-scale machines of more than 100 qubits, running in Poughkeepsie in Germany and in client sites around the world. That fleet took a decade. In May 2016, IBM put a 5-qubit processor on the cloud and called it the IBM Quantum Experience. It was a curiosity, but by 2018, more than 80,000 users had run more than 3 million experiments on it. In 2019 came System 1, a commercial machine. Since its launch, IBM has shipped 5 on-premise systems to customers, including the University of Tokyo and the Rensselaer Polytechnic Institute. Then the scaling race. The Falcon processor at 27 qubits, Hummingbird at 65, and in 2021 Eagle at 127, the first IBM chip passed the 100-qubit threshold. The Condor processor pushed the count to 121 qubits, and then IBM changed direction. The Heron processor, unveiled in December 23 alongside System 2, carries 133 qubits, far fewer than Condor. Because the company had concluded that what matters is not how many qubits a machine has, but how few errors they make. And remember that pivot, it is the hinge the entire plan turns on. IBM can afford that kind of patience because quantum is a rounding error inside its $2.8 billion company. The rest of the industry has no such shelter. In the third quarter of 2024, the 3 listed Quantum PureQ, Rigetti's, and D-Wave posted combined revenues of less than $20 million. 3 public companies, 1 quarter, less than $20 million between them. And yet their share prices ended 2024 on a substantial bull run after Google unveiled a quantum chip called Willow and declared significant breakthroughs. The market was not pricing what these machines earn. It was pricing when they would matter. A bet on a date, which meant the whole sector carried a very particular vulnerability. If the date moved, the price would move with it. In January 2025, the date moved. It moved because of one man at one analyst event. Jensen Huang, the chief executive of Nvidia, was asked about quantum computing. If you kind of said 15 years for very useful quantum computers, that would probably be on the early side, he said. The late side, he added, was 30 years, 20 most people would believe. The reaction was immediate and brutal. D-Wave Quantum fell 33% in a single afternoon. Rigetti Anku and a company literally named Quantum Computing each dropped around 40%. But notice what had actually happened. The chief executive of a company that does not build quantum computers offered an opinion about a date, and billions in market value evaporated before the close. No filing changed. No machine failed. No contract was lost. The only thing that moved was the timeline in one influential man's head, and that was enough. When an industry's entire value lies in the future, whoever moves the date owns the price. IBM's answer to the doubt came 3 months later, and it was not an argument. It was a number. In April 2025, the company announced plans to invest $150 billion in America over the next 5 years, including more than $30 billion in research and development for its American manufacturing of mainframe and quantum computers. Read that sentence again because the pairing is the point. The mainframe, a machine IBM has built in Poughkeepsie for decades, which still carries more than 70% of the entire world's transactions by value. The quantum computer, a machine that had just been valued by its own maker at $1 billion of signings in 8 years. One press release, one sentence, both machines. The old computer pays for the new one. Arvind Krishna framed it his way: technology doesn't just build the future, it defines it. The quantum network, meanwhile, counted nearly 300 Fortune 500 companies, national laboratories, universities, and startups with over 600,000 active users. The usage is real, the revenue at scale is still a promise. And 6 weeks after the investment announcement, IBM published the plan itself. June 10, 2025, IBM Quantum Starling, a large-scale, fault-tolerant quantum computer delivered by 2029, built in a new quantum data center in Poughkeepsie, New York. The specification reads like science fiction wearing an engineering schedule. Starling is expected to perform 20,000 times more operations than today's quantum computers, 100 million quantum operations on 200 logical qubits. To represent its computational state would require the memory of more than a quintillion of the world's most powerful supercomputers. Behind it waits Blue Jay, 1 billion operations across 2,000 logical qubits. The road runs through milestones named like an aviary. Luna in 2025, Kookaburra in 2026, Cockatoo in 2027. Each one solving a piece of fault tolerance, built on an error-correcting code that cuts the physical overhead by approximately 90% compared to other leading codes. But strip away the ornithology, and what remains is rare in corporate life: a promise with a date on it. Companies do not publish deadlines they are indifferent to missing. IBM gave itself 4 years in public, which brings the story back to where it began. July 30, 2026. The demonstration with the University of Chicago was not a product launch, and it earned nobody a dollar. What the team did was execute 70 logical qubits, one of the largest error correction demonstrations on record, running 2 4015 logical 2-qubit operations and 4068 logical T-gates, with logical error rates 10 times lower than the physical ones. The computation took approximately 15 minutes. The leading classical approaches faced prohibitive runtimes. Bill Pfefferman of the University of Chicago named the real achievement: verification remains one of the biggest challenges in firmly establishing experimental quantum advantage. What was solved is a benchmark. A deliberately hard, abstract problem, not a drug discovered or a portfolio optimist. But look at what it proves in the roadmap's terms: error correction, working at scale, with results you can trust. That is precisely the capability the 2029 machine depends on. The physics milestone, in other words, is a financial signal wearing a lab coat. The first hard evidence that the deadline IBM published might actually hold. So close the 2 columns of the ledger. On one side, the money, about $1 billion of signings across 8 years, roughly are $29.4 million a quarter, with no quantum line item anywhere in the earnings report. On the other, the commitment of the $150 billion investment program, a fault-tolerant machine promised for 2029, and now a verified claim of quantum advantage. The gap between those 2 columns is one of the widest in modern corporate strategy, and IBM built itself to survive it. Quantum patience is affordable when the rest of the house made $62.8 billion in 2024. The pure plays enjoy no such luxury. They remain one sentence from one executive, away from losing 40% before the market closes. Here is what this channel takes from it. The question is no longer whether the machine works. July 2026 suggests it finally does. The question is whether the signings become revenue before the promises need renewing. And the honest answer is, watch the filings. The day quantum computing appears as its own line in IBM's earnings report is the day this era truly begins. Until then, the ledger stays open.